Hello everyone. Good afternoon. My name is Riccardo Crescenzi. I am a professor of economic geography here at the LSE, and I will be your host for this event today. It is my great pleasure to welcome you to this LSE Department of Geography and Environment online public event, and it is an honor and a pleasure to welcome our distinguished panelists. Isabel Blanco from the EBRD, Professor Francesca Medda from UCL, and our very own Professor Andres Rodriguez Pose. I will say a few more words on each of our panelists once I will introduce them in the panel round of the event. If you are using Twitter, the hashtag for this event is LSE Recovery Fund. And keep in mind that this event is being audio and video recorded and will be made available on the LSE events channels. So how are we going to organize our time today? I will shortly introduce the theme of our conversation, of our discussion today, and then I will immediately leave the floor to our panelists, who will make their initial statements and will present some key ideas on the EU Recovery Fund and on recovery policies more generally in a first round of interventions. Following that, we will have the first live exchange among our panelists. So they will discuss among themselves their different views on the problem. And this will be followed by a Q&A section with the audience. So please make sure you use the Q&A function here below in the Zoom session. So use the Q&A function to send your questions. And we'll select some of the questions and introduce them to the speakers. Make sure you specify your name and affiliation, if at all possible, when asking your questions. And there will be some brief concluding remarks at the end of the Q&A section. So let me briefly introduce the topic of today's meeting. We all know that COVID-19 has hugely impacted all economies the world over. However, we also know that we have still not seen the full depth of the economic consequences of the COVID-19 crisis. Once current special support measures will be lifted, at that point will be progressively lifted, and according to the preferences of different governments, the timing will be more or less stringent. We will probably see the full depth of the crisis and the consequences, the economic, the social and economic consequences of COVID-19 will be felt by firms and individuals on the ground. And what is also important to keep in mind, will be also felt by voters. So this might and will trigger political and social reactions to the consequences of COVID-19 in terms of job losses, in terms of missed opportunities, etc., etc. And we are already seeing some of the most significant manifestations of the socioeconomic pressure generated by COVID-19. Think about the reaction to the lockdown measures, etc., etc. But the feeling is that this is really only the beginning. Once the full force of the economic recession will unfold itself, we might see more of this in EU and beyond. In response to these, countries, governments all over the world and put in place a number of recovery actions, have used public policies not only to mitigate the strength of the economic impact of COVID-19, but they have also designed and are now in the process of trying and implement measures to try and facilitate the bouncing back, the recovery of their economies once the health crisis will be somewhat mitigated by the rollout of the vaccine. This is true for the US. There was a lot of debate on the design and the measures of the recovery plan by the new US president. But also in the UK, the debate on the proposals of the UK government on how to deal with the economic consequences of COVID-19 combined with the strong impact of Brexit. So this debate and what we'll be discussing is about the EU, but EU is really a very relevant case study to discuss and debate about the recovery measures, but this is not really only about the EU. This is basically about the reaction to COVID-19 in virtually all countries of the world. So, like I said, the EU and its member states are pulling together resources at EU level to react, to respond to the economic consequences of COVID-19. And you can see how politically relevant this is, in particular when taking into account, when considering the major setbacks in the rollout of the vaccination campaign in Europe. So how politically and economically important it is for Europe to have a credible plan to relaunch the economy and mitigate the economic impacts of COVID-19. The EU and its member states have put on the table a 750 billion euro action for new investments and reform under the umbrella on what is called Next Generation EU, also known as the EU Recovery Plan. And this will be combined, of course, this is additional to the EU budget for the period 2021-2027. So the combined resources mobilized by Next Generation EU, by the EU Recovery Plan, is of 1.85 trillion euros. So that's an unprecedented magnitude in terms of like public policy intervention. And countries, member states, are now preparing their projects. The deadline is in exactly 1 month from now. And this is the reason why we wanted to have this event today, because it's very close to the deadline for member states to submit their plans to tell the EU what is it that they want to do with the resources made available by the EU Recovery Plan. How should countries spend their resources? And this is the very focal point of our discussion today. Well, expenditure for the EU Recovery Plan should revolve around two key pillars, should be inspired by two key principles: green and digital transitions. The green transition, the idea comes from the EU Green Deal, a very fundamental document thinking about how Europe wants to foster economic growth in a way that is sustainable and green. And digital, like I said, thinking about the Shaping the EU Digital Future Plan that inspires actions in this area. So this huge amount of resources has to be invested to foster recovery in the EU around with actions organized around these two key focal points, these two key ideas, the green and digital transition. The basic idea is to use the recovery from COVID-19 and its economic consequences, not only to rebuild, but to rebuild better, to rebuild in a green and digital fashion. So what's the problem? What's the catch here? The fundamental problem here is that when we think about these priorities, when we think about the green and digital transition, we also know that these are the most difficult objectives to achieve vis-a-vis other possible objectives, vis-a-vis other possible policy tools. So when we ask member states to boost recovery, leveraging projects based on green and digital, we know that we are asking them to design projects that are more complicated to design, they are more complicated to implement, and that might be on which many countries might have much less experience in terms of management, in terms of planning, etc., etc. And this idea came from a recent analysis that we have just published on the Journal of Policy Modeling with Mara Jua and Giulia Sonzogno, where we looked at existing projects funded by the EU and tried to see, okay, what are the characteristics, looking at the text of the different projects, what are the characteristics of projects that targeted in the past green and digital objectives. So we tried to come up with projects, to identify projects, looking at a huge database of projects implemented in Italy with the EU Cohesion Funds resources, and see, okay, what are the characteristics? What is the probability, in particular, of these projects of being implemented on time, of following their own timeline? And what we found is that projects that are in line with Next Generation EU in terms of digital and green transitions are also significantly more likely to accumulate substantial delays in their implementation vis-a-vis other more traditional projects. So here the problem becomes, if we want to react to COVID-19 and its economic consequences, we need to act fast. But on the other hand, if we want to build better and serve the objectives of the green and digital transition, we run the risk to design projects and to put our bets on projects that are less likely to be implemented on time, and therefore, without being agnostic about their impact, therefore, in any case, less likely to generate impact soon in a timely manner. That is the urgency that we have now in terms of recovering when it is needed the most. This is just like the starting point. So policymakers the world over are really facing a fundamental dilemma. Should they go for, and this comes also from the debate in the UK, for shovel-ready projects, things that we can implement now quickly? And there are two options in this regard. Shovel-ready project will be investing in traditional infrastructure, things that we know how to do and that we can do fast and can generate significant public expenditure in a very limited amount of time. Or, for example, selecting existing projects that were sort of put on a side because they were low priority projects. Easy, quick, fast impact. Or, on the other hand, really take the risk and embrace the opportunities offered by this crisis to build better and follow the idea of investing in a green and digital future. But with the risk of facing delays and having more problems, having a more difficult pathway to impact. This is the big dilemma that we aim to discuss today with our experts. Traditional shovel-ready infrastructure, or can we balance the trade-off and go digital and green without necessarily sacrificing the objective of delivering fast and reacting to COVID-19 in a successful manner? This is the big dilemma that we will need to balance in trying to rebuild better, if at all possible. And that's the big dilemma that I have asked our panelists to discuss. So I leave the floor to our panelists with no further ado. The first speaker is Isabel Blanco from the EBRD. Isabel is Associate Director and Lead Environmental Economist of the Economics, Governance and Policy Group of the EBRD, the European Bank for Reconstruction and Development. And she's also a visiting fellow at the Grantham Research Institute for Climate Change and Environment in the Department of Geography and Environment at the LSE. Isabel, the floor is yours. Thank you.
Thank you very much, Ricardo. And thank you for inviting me also to this event. I'm delighted to be here. And I see there's a large group of people listening to the event, which is great. I think you have introduced the topic very well. So I'll try not to repeat some of the things you said and actually, answer the very interesting questions and dilemmas I think that you are raising in your speech. Just to finalize the introduction, for people who are not very familiar with the EBRD, this is an international development bank with a focus on private sector investments. We have the headquarters in London, and I think my presence here today is interesting because we combine countries of operation, some of which are in the European Union, and therefore they will benefit from this facility. But there are others that are in other geographies, in Central Asia, in the north of Africa, Turkey, for example. So we have a very interesting cocktail of situations regarding both the impact of COVID and also the way in which they are thinking about the recovery packages and to what extent they want and they can incorporate the Build Back Better features. Maybe to follow up, I think the first thing I would say is that the Build Back Better debate is mainly a rich countries debate at this stage, with Europe at the center of it. We were doing some analysis in my unit about the size and the type of measures, rescue and recovery measures, globally speaking. And there have been different analyses being done in the last year. They show that 80% of the rescue and recovery packages have gone to OECD countries, therefore to rich countries. In our countries of operation, the picture is very similar. So the majority of things that are happening in the recovery debate are happening in Europe, and they are driven by programs like the one we are discussing today. But there are many other countries in the world who do not have the capacity to deploy these very large amounts of money. And it is worth remembering, I think, that reaching the climate objectives will require a more even distribution to the effort. So it is too late for this recovery program of the European Commission, but some thought about how to guide and help countries outside the European Union embed green and digital solutions into their fiscal policies, for example, is something that I think could be reinforced in the near future. There is a list of examples I will be happy to give you maybe in the second part of this debate about how our countries of operation have been doing over the last year in terms of incorporating green features in their recovery programs when they had one, and the divide that we have seen between European and non-European countries. Now, to the question of whether there is a trade-off between efficiency and speed, I think in my opinion, the answer is probably yes, particularly for the regions that have less planning capacity and for the regions that are earlier in the green economy transition process. And here, I think the European Union counts on the advantage of having developed over the last 20 years a very large number of plans and programs to promote the green economy transition. So countries now have a plan to deploy renewable energy, to do energy efficiency, to incorporate the climate resilience elements into infrastructure. And this tells me that they should have, all of them, a battery of shovel-ready projects, more or less shovel-ready projects that they should be able to or have the ability to incorporate into this framework facility. Now, there are still challenges, and I think the main challenge is about the absorption capacity, particularly where the private sector is the main implementer. And for the green economy transition and for the Build Back Better to be implemented both in digital and in green, I think the measures have to go beyond the traditional infrastructure projects, including green infrastructure projects like the electricity sector, for example. One clear example I was thinking of this morning when preparing for this speech was about the green buildings. And I was reading in The Guardian the example of the UK. The UK less than a week ago had to scrap Green Homes program, I think they called it, which was a green buildings program. And it had a very large amount of money devoted to it. Now, they've been incapable of implementing it in a good fashion, and in the end, less than a year after they launched it, they had to cancel it because they were not getting the applications, because the builders did not have the skills, or there was not clarity on how they could implement the measures that were covered by the grants. So this is only one example of how green measures in sectors that are less mature than the renewable energy sector, for example, they could struggle in being implemented in the short term and to reach the objectives that we are discussing here for the COVID recovery. Another point I wanted to make is mainly, or maybe about the lack of clarity of what Build Back Better actually means and what are the practical ways to implement it. And I don't think this is for green only, because I think for digital it's even less clear. So when we say we are going to build back better, and when we say how do you make a traditional infrastructure project a green project, I think it would be nice to have some sort of handbook. Well, I'm saying handbook, not in literal terms, but a clearer guidance on how do you make in the main economic sectors measures that have been used over the past decades have a green, a digital, or an inclusive component. And this is important for the European Union, where I think there is experience on how this has been done over the last few years, but more broadly for the rest of the world and for regions. If you go below the national level, I think there is a real need, a very practical need to say how you are going to implement this type of measures to make them impactful. Another point I wanted to make is about the request of the European Union, in this case, of different documents which are running in parallel. And I am deeply involved in the Just Transition initiative, the Just Transition for the European Union, which is also part of the European Green Deal. This Just Transition also requires countries to prepare, they call it Just Transition plans, which are national planning documents about how they are going to promote regional development and green development in carbon-intensive areas. So countries now are in a situation where they have to implement and they have to design in just a few months a lot of planning documents which are actually tackling very difficult topics. And I wonder to what extent some of the of the regions have the capacity to do this in an effective manner. If you ask me which are the measures which I think do a better job in terms of build back better and they can be implemented in the short term, I think the most important one probably has to do with the energy sector, as everyone knows, renewables and grids, and generally implementing energy efficiency measures in industrial sectors, heating and cooling, public transport, electromobility. These are the ones that I imagine are going to be pushed by the regions because they have there is more track record. They are better known and the risks are lower. There is a question, of course, on whether this is where the money should go in the first place. And the last thing I will say, not to consume more time here, is maybe that when we look into the measures that we want to promote, it would be nice to have some analysis of what are the short-term impacts, for example, in terms of additional job multipliers and additional job that will be created, implementation speed of these rescue and recovery packages, and to put that against the long-term impact that we are expecting. So if we are going to do some infrastructure projects, we need to know to what extent this physical capital is really what is needed for the long-term development of the region or the country, because otherwise there may be a bit of a contradiction there, and we may end up with lower quality or even stranded assets over the medium term. So Ricardo, I think I will leave it here. I spoke enough, and I'm happy to take up more issues on the second round. Thank you very much.
Isabel, thanks a lot. This was very, very interesting and raising already a number of issues questions to be discussed. But let's leave the floor to Francesca, who will also bring in more ideas on the digital part of the discussion. Francesca Meda is Professor of Applied Economics and Finance at the University College London, UCL. She is the Director of the UCL Institute of Finance and Technology, dedicated to innovative finance and technology. Francesca, the floor is yours. Thank you.
Thank you so much. Thank you to all the panel. Thank you to Ricardo. I have different from my other slides, so let's try if I can share with you my screen. First of all, let's see, which is always complicated in the system. Can you see it?
Yes.
Okay, so if you can see it, I can start because Ricardo gave me exactly 7 minutes. So to stay in 7 minutes, I said, okay, I will use slides. As Ricardo said, I will look into the digital transition and in particular the investment. As Ricardo have give us 2 options or 3 options. To say, okay, invest directly to projects that are ready, invest to projects that are not ready, that have been left there by the authority, or invest in digital and green. I will offer a fourth way now. So let's see if this is another option that we can consider. So first of all, I want to remind to every one of you that not only we talk about recovery, but also resilience. And so when we talk about resilience projects, we talk about projects that are not just to bring back where we were before, but also to build something new, particularly for the future generation. So he has a vision that is beyond very short term, but is a long-term horizon. We need really to make a change. So for this reason, we talk about green transition and digital transition. I put here 3 words, which are trust, integrity, and prompt, because in some way the digital system can allow us to obtain this kind of objective. And I put there next to the word some of the phrases that you can find in the European document. So work for the common interest, inclusive, sustainable recovery, accountable, transparent, provide answer and solution in relation to the scale. And a lot of the projects related to digital will allow you this. But I wanted to observe another aspect that already Isabel have noticed. Digital systems are what we identify as indirect goods, so are enabler of other things. So you don't invest in digital system just per se. You invest in digital system because they will allow you to for example, faster payment, more inclusive, for example, have control of investment, green investment, so to have been more accountable, to have a recording system. So all these things, this is an important aspect of the digital system that is also is shared with other for example, infrastructure, because this we are talking about infrastructure, digital system and infrastructure, like, for example, transportation, like other service, but particularly in infrastructure, transport is the classical one that is an indirect good. The other aspect interesting when we talk about digital system is that it's very much interconnected with other infrastructure. And at this point, I would like to introduce a work that we have done that offer you another solution. So now I made a video. It's not very nice, but okay. Please appreciate the attempt here. So now there is like a volume. I will speak on top of that. I put also music, but okay, let's put. Okay, so let's start. Can you see everything? Can you see the video? Can you see the screen? Now we will
see the screen, the white screen, yes.
Okay, well, so let's start. Okay, so what I wanted to speak about now is about investment where we leverage the interdependency across infrastructure. And we started this work looking at another very big problem that we had in the UK, which was the flooding in 2014-15 in Somerset. In that case, we had not a pandemic, but a really big problem. All infrastructure, particularly the transport infrastructure, were completely blocked. Railway system completely flooded, highway system completely blocked, and all the region was blocked for weeks. So what happened after? Network Rail, as well as highway agency, intervene singularly in each infrastructure. So the question is, can we pull together the investment and invest in our interdependency? So for example, to save to environmental saving system rather than on the single infrastructure. This is a question that, of course, the European Union is asking to the regional system, the national system, what do we have to invest? Remember that we are coming from an austere period where money were not available. So it's true, there are a lot of projects that we didn't consider. But the European Union will have to put together and divide their budget under different aspects. So here is the idea that we come out by using, we have used the cost of the investment and as well as the social and economic impact of each investment, including the environmental aspect. What we have done, we have used artificial intelligence in order to diminish the risk in the projects, increase the return, but not only the return, the financial return, but also the environmental one. We have used as a model an input-output modeling, but we have implemented with artificial intelligence, AI, so we have looked backwards of all the input-output to learn what we can, how we can intersect together the infrastructure. And we can come out with this interdependency investment strategy. And now you will see some results based on the data of 10 years. It was we did an experiment. So imagine the UK, we don't have any sewage. We have to invest 100% on the sewage because there is nothing. And we want to leverage other infrastructure in this investment in order to have like a synergy, an interdependency between one and the other. Now we will see that the first infrastructure that will have a great impact, so return of investment, it will be, for example, the gas industry. Why? Because, as you know, renewable project like a generation of gas through sludge using anaerobic digestion is related sewage with, for example, gas production, gas industry. And here you see the same experiment done for transportation. So what you see in dark gray is the interconnected. So other infrastructure, they are connected with the infrastructure, with the specific investment. IS means digitalization. So you see that investment of a specific infrastructure is not looked at as a silos, but is connected with the other. And here is what I'm proposing for digitalization. Digitalization needs to be connected, is an enabler, is not an investment per se. So results that we can reach by using a technique like this, we leverage infrastructure, interdependency, because this is one of the major characteristics. We decrease the financial risk and therefore risk of what Riccardo was saying, and we interconnect the infrastructure sector. So we don't have this mysterious investment in investment that are not connected with each other. And of course, by using this interconnected activity, we will have an easy way also to link the Green Deal and the green investment. I think the video is finished. I've reached 8 minutes. Riccardo, I finished.
Thank you, Francesca. This has been incredibly interesting and also sends a more general message, because it's an example of how we can use data and we can use knowledge to inform public policies. And when we read on the newspapers debates around the recovery fund, we do see a lot of ideology and very little like reference to like sound methods that could inform the debate and the design of EU recovery fund projects. So thank you. We will go back to some of the issues that you raised in the new round of discussion among our panelists. But now I would like to introduce our third panelist, our Andrés Rodríguez Pose, who is Professor of Economic Geography and Princesas de Asturias Chair at the LSE, Geography and Environment. And he's also the director of the Cañada Blanc Center at the LSE. Andrés, the floor is yours. Thank you.
Thank you very much, Riccardo, and thank you for inviting me. I'm afraid I haven't got any fancy videos, nice videos like Francesca just presented, but I'm going to try to do my best in the 7 to 10 minutes I got allocated. Let me start by this idea of this Next Generation Fund, the Recovery Fund, which represents a real honeypot. It's, as Riccardo indicated at the beginning, with 1.85 trillion euros invested that are going to be invested in the coming years. In Europe, is probably the biggest investment, if not bigger than the Marshall Fund. So it is really a new transformation in Europe. And this has the aim of providing a timely and effective measures to repair the damage not just caused by COVID, but also to address many of the problems that were actually dragging growth in Europe behind, in order to prepare Europe for a far better future for coming generations. But here in this statement, this idea of having a timely and effective measures to repair the damage caused by COVID-19 and prepare for a better future lies a contradiction. You have two objectives that can be mutually reinforcing, and the European Union, and we, all of us, would like for them to be mutually reinforcing, but it might not be necessarily the case. Because let's suppose we go for the first objective, which is the one that everyone is immediately demanding. We are in a big crisis. A lot of people are suffering. A lot of businesses have been suffering the conditions of a lockdown for a long time. And there's a need for timely and effective measures to repair the damage caused by the pandemic. But this implies addressing the urgent needs of individuals, of firms, of industries, and of sectors that have been hit very hard by the pandemic, and that they need urgent relief, and they need it today, they don't need it tomorrow. And this is in combination with the second objective, which is prepare for a better future for coming generations, which implies moving away from many of the practices that have failed to deliver, for example, in the case of Europe, increases in productivity. Witness, for example, the European productivity paradox, in which productivity across many European countries, including the UK, has stagnated for quite some time, but also that have failed to create in many parts of Europe permanent and sustainable jobs for the young, and in many cases as well to deliver sustainable and resilient economic growth and well-being across the continent. So what we have is one objective that focuses on the short term, and the other one that focuses on the long term. But if we're going to go for the short term, which implies reviving struggling firms, propping up declining and sometimes polluting sectors, and addressing urgent needs that might not necessarily prepare European economies for the challenges ahead, we might be building back, which is something that I think it was Francesca and Isabel both highlighted. This is not what we want, but it might not imply necessarily building back better. We might just build back, which means pushing difficult decisions further down the line. So we will keep on kicking the can for longer. Or the other option is let's build back better, which will depend very much on the forces or a series of forces that are likely to crash over this recovery fund, and might imply that there are difficult political decisions that might take place. Ricardo was hinting at the idea that if we don't address the urgent needs, there might be rising discontent on top of what we had seen before the pandemic, and there might be let's say, a reaction by large chunks of the population against current decision makers and possibly against the system, in a system that is now in the throes of rising populism and therefore facing considerable difficulties. And this is going to happen with a large amount of funds that represents, as I said before, a honeypot to which many would be attracted, from politicians and decision makers across the whole of Europe, to existing firms, to social groups, and to civil society as a whole. Hence, the governance of the Recovery Fund is going to be absolutely fundamental. How we manage it, how do we provide a governance system in contexts that very often are difficult from an institutional perspective, is going to be crucial, because the Recovery Fund is going to trigger a number of dilemmas that have been highlighted both by Ricardo and Isabel, and would lead to important trade-offs on which the future of Europe is going to hinge. And there would be many trade-offs, but I'm going to focus very briefly on 5 that, in my opinion, deserve considerable attention. The first trade-off is whether we go for the immediate, the one I have been highlighting, needs versus a structural transformation. Here, there are quite a few questions that we need to address. Do we prop up existing sectors? Do we address the strong and very often justified plight of industries and sectors that have probably witnessed the worst year in their history and are unlikely to recover overnight and might just go down because the pandemic is lasting longer than what many of us would want? Or do we go for projects that are bound to prepare our societies for the future environmental, social, and economic challenges, which is this idea of building back better. And here the crux is, how much do our decision makers undertake the tough decisions now and implement what are in many cases long overdue projects, but also long overdue reforms? Or on the other hand, to what extent do they follow their own interests and often their political instincts and go for short-term relief and let others bear the brunt of the future cost of not doing the necessary reforms? We have plenty of examples in society of what this has happened. I just want to remind you of the story of a former German Chancellor, Gerhard Schröder. If that is anything to go by, he and his government actually implemented very tough reforms in Germany that probably set up the seeds of the good, let's say, crisis and post-crisis period in the previous crisis, the global financial crisis that Germany had, but it cost him and his party his job. So in context of relatively weak governance, we might see that decision makers in the end, and this, remember, this is not going to end up in a month when the projects are presented. This is going to be a whole process that is going to last for quite some time. They might resort to implementing policies and projects that provide short-term relief, that probably prop up their electoral prospects, but kick down the can the urgent reforms that are needed. The second trade-off would be that between big projects versus a myriad of smaller projects. Both Ricardo and Isabel have been talking about shovel-ready projects all the time. And that is a sentence that brings shivers down my spine very often, because if you have a shovel-ready project in the past, are generally big infrastructure projects, projects that have been ready for some time, that in many cases have not been funded because their economic, social, and environmental benefits were marginal. So we might use these funds for projects that were not considered the most essential projects before, therefore not funded. And we might end up with projects that don't deliver the intended returns, that many of them would end up as white elephants or cathedrals in the desert, and as Ben Flyberg has repeatedly shown, go into overcost and with limited general benefits. This would mean big infrastructure projects, as I mentioned just a moment ago, and we've seen many of those in Europe in the past. I am, after all, Spanish, in a country that has invested heavily in infrastructure, and many of these projects have not always delivered on the expected returns. The third trade-off would be the big versus the small firms. This idea that there's a honeypot, and the recovery fund is already seeing many European countries and large firms jockeying for position. Very often these large firms, they claim they are the best prepared to respond to the challenges, but it's just very often just based on the question of their size. Whether we can expect a transformational change from all these projects, or the transformational change that is expected from the investment related to the recovery fund is another question. Many small firms, simply because of the size, are at a disadvantage in this respect. And of course, many would not have anything new to add, but there are quite a lot that might probably play a role because they have interesting ideas, but they might be, because of the speed in which this is developing, maybe cast aside. The same applies for the fourth trade-off. I'm not going, because in the interest of time, I'm going to limit this, but it's going to be do we go for more established firms, or do we go for new firms that might have new ideas and might offer new innovation? And very often some startups might bring greater innovation, but their voice may be blunted, they might be overlooked in a system that fundamentally promotes the speed of reaction at the expense of a thorough, open and transparent discussion of what these funds are going to be used for. And then also, finally, there's going to be the question of what scale. Do we do it at the national scale, or do we do it at the regional scale? And of course, if we do it at the national scale, in many parts of Europe, national governments are better prepared than regional governments to do the big projects that seem to be favored at the moment. But the problem is that if we do that, what is the guarantee that we don't see the increasing or the rising polarization that many of our countries have witnessed over the past and has been one of the seeds of the rising discontent and resentment against the system? In all this, what is going to be crucial is the issue of governance. One of the things that I have disliked about the process so far is that most of the decisions that have been made so far have been behind closed doors, whether it is groups of experts or one, as in the case of Portugal, one individual actually sitting in a room and deciding what are the most worthy projects. What we are is foregoing the opportunity of having a more open and transparent discussion, allowing for voice and participation and the likelihood of reaching societal consensus in order to move our societies in the same direction, which is what in the end is going to make everything much more sustainable and resilient. Europe needs to ensure, is putting this fund to ensure that future generations have a better future. The problem is we're not sure whether by going into massive debt in order to fund some of these projects, we are going to grant the way we're going about doing this, or we're putting the foundations of a more economically, socially, and environmentally sustainable and resilient Europe. We don't know whether we're going to build back better or just build back to what we have, which was highly imperfect. And this is a thing that we need to discuss, and we need to discuss as a European society, and both within Europe as a whole and within our countries in much greater detail, because what we want to do is bestow future Europeans with a better society, not just with a bigger debt. Thank you.
Thank you, Andres. I think this is extremely topical and relevant. And I think this debate is a little bit of an attempt to break ice and create more opportunities for this type of conversation and discussions. I would like to ask our panelists if there are any immediate reactions that can trigger a second round of interventions before I bring to you some of the interesting questions that are coming from our large audience. Isabel, is there anything that you'd like to add or comment on?
Thank you. Andres is a very good academic because he poses all the difficult questions, you know, and I was taking notes. It's very interesting, the angles he was presenting on how do you structure this in order to make it impactful. And well, as you said, I'm more a practitioner and I work in an institution that actually finances these things rather than look theoretically at them. So I can react on how I see some of the things he was saying. There was a discussion between whether we prefer, to what extent this money should go towards addressing long overdue reforms or the short-term patches that we can do in the economies. And that's a very interesting question. And as he was saying, we see plenty of examples, you know, where the money is being used to cover up for the easy measures that will bring social support in some cases rather than embarking in the structural reforms. So I think the answer is the money should be focused probably on the structural reforms. It should be accompanied by a very strong communication message, and it's linked to governance as well, so that people do not react negatively towards channeling money sometimes to activities that may have a longer term return versus the short-term return that others, which are less challenging, if you want, may have. So a clear communication on why this is being done and what are the criteria for going towards the more challenging ones, I think this would be needed, or this would be interesting to have. Then big versus small projects, and I'm Spanish as well, and I agree there are plenty of big infrastructure projects that were done 10, 15 years ago that really didn't pay off as well as we thought, or they thought. I wouldn't have a preference I wouldn't have a preference for big or small. I think the economics, presenting financial analysis on what are the expected returns of the projects will be important. So not only the nature of the project, in which sector, how does it incorporate digital or green features, we need to go to the financials of the project and the multipliers they will bring in order to make a sound selection. And I imagine this will end up being a myriad of between large and smaller projects, and that's a fine outcome. Big versus small companies, again, very interesting. I would say there's going to be grants that are going to be given, channeling them towards riskier segments, including the startups, and if it is with a big company, to the riskier segments of their activity is a good thing to do. And there's always a higher risk of failure, of course, that you are channeling money towards something that in the long run doesn't have the effects you were intending. But this is the nature of innovation. And this is one of the reasons why money is being made available. So again, if I had to choose, I would say combination of big and small, and the priority being given probably to the nature of the project rather than the size of the company. And finally, national versus regional scale. That's a very interesting debate, you know, and in the EBRD, again, we have European countries and we have other countries. The governance process and the weight of regional versus national governments, it depends a lot on the country we're talking about. I think the European Union has got this good model of regional governments managing a lot of the funds that go through countries. And I'm sure improvements can be made in the governance of the process, but there seems to be already some scheme functioning there, and some sort of top-down and bottom-up approach that meets somewhere in the middle. And I hope the cohesion and the structural funds that have been deployed for, I don't know, 30 years, they create some sort of precedent on how the money can be channeled this time and how these two levels of administration can work together. So I would start from there, and certainly not having one person in the room making all the important decisions in a single program. I think this would be my, you know, immediate reactions to what I heard. Thank you.
Thank you, Isabel. Francesca.
Okay, so I was reading also the questions that they are giving to us. I think one interesting point, particularly if we think about digitalization, which is a little different from the green investments, because as you know, green and sustainable investment has been done. They have a long tradition in the EU. There are a lot of programs, like Isabella said. However, digitalization is something relatively new. And so there is the biggest impact will be that a lot of administration will create the biggest problem to implement that, because they will see the biggest novelty to their way to change. However, looking at the last question, digitalization will allow us to make more inclusive, for example, policy, because it will be easier for us to discuss. There are so many ways that we can do it. And look, for example, I jump really now to something strange, but look, for example, the case of GameStop, just how we look at a different way investments. And we are still looking at something that is part of market manipulation, so from the point of view of the regulator. But it's interesting, it's very interesting. People are small investors are entering without intermediary inside a market that have been always looked only by experts. Now there is a new way to look, thanks to the digital platform that allow us to enter in a lot of fields like finance. Now, in relation to project-specific firms and so on, small firms, big firms, I think, again, we have to leverage the connection and not look at silos, because this was one of the errors that we have made many times. And the white elephant comes from the thinking in silos. We have to look through what we are the real objective that we have to achieve. And the biggest achievement is that we are creating a new Europe for the next generation. Not for we are not reconstructing the one that we left. We are reconstructing something better. So it's necessary to really change some of the characteristics. But I think the biggest difficulty, I read in one question, is really about implementation and administration in Europe. That will be the greatest problem. And you know, Riccardo, unfortunately, so fortunately or unfortunately, I don't know what, at this moment I'm working for the financial authority in Italy, and the biggest problem is really change the way the system works, change the culture inside. And there is a great push, but also a great fear. And so that at the moment that we made a change, we will never return back. We'll never return back. At the moment that you have a digital ID, you don't return back to the piece of paper. But it's the jump that is difficult. It's the trust that we have to move that is still very complex. Still. So I think I've answered some of the questions that were also in the chat.
Yes, thanks, Francesca. Yes, we are having an incredibly lively debate and with lots of questions coming through in the Q&A section of Zoom. And we will try to address as many of those as possible and follow up maybe by email to the remaining questions. Andres, is there anything that you'd like to add now before I just ask the panel some of the questions that, or my take of the questions from the audience?
Yes, very quickly, and also responding to a question by Marco Lopriore from the chat. All this idea of here is which sectors do we go for? And of course, the fund is for green and digital transformation. And I'm all for that. It's important that we go to a more sustainable environmental economy and that we improve the way we all work. We have better access to the digital system. The problem here is one thing that in the way this has been, let's say, governed, that in general, what we are seeing is that these are going to be strongly capital intensive processes that are going to have significant implications for the way we work. Francesca has spoken at length about the transformation, the resistance that she might be encountering in Italy, but it would be across the board. And there has been very limited discussion on the transition process. And that is a big, big problem, because this has been from the European Union, but also at the national level, mainly a technocratic process, a political process in which there has been relatively little involvement by, let's say, the population as a whole. And we're going to have an extremely difficult transition in which, by going green and by going digital, there are going to be a lot of sectors that are going to suffer. There are some transition funds, but they are not the main part. And that is going to brew significant discontent on top of what we have. And this is something that has to be factored in. Unless we make it more transparent, more clear, there's more debate, we might have that this growing discontent might yield anti-system, more extreme political options might rise. And if we have next year a Marine Le Pen president of France, that's the end of our digital transformation, and especially that's the end of our green transformation. So this is something that needs to be put in the open and needs to be discussed to a far greater detail than the situation that we are at the moment, perhaps because we're in a pandemic in which the decisions are being taken behind closed doors with little participation. And then we're going to find that many of us are not going to, large sectors of the population are not going to benefit immediately, and they may react, bringing the whole transformation that we're aiming, or many people are hoping to get, down much quicker than what we thought.
Thank you, Andres. Let me highlight three issues, three sort of cross-cutting questions that come from my reading of the Q&A, of the interest of our audience, and see how the panel reacts. I think there is a recurring issue about, okay, why should we expect this crisis to be different in terms of rebuilding better vis-a-vis other crises that have affected the world economy if we don't see a paradigm shift in the debate in terms of the models, in terms of the participation of people, and also is another question on the involvement of academia. So how and to what extent this will be driven by politics vis-a-vis being new policies being formed by sound evidence, sound evidence on what works and what doesn't, coming from sound academic analysis. If we look at the debate, many academics are completely silent because they have nothing. They don't have a paper on the topic, and so they feel they cannot add much. So we really need to push some of our colleagues outside their comfort zone, like we are doing today, to try and reflect and open an informed debate on what is it that we want to achieve and how we want to achieve something different vis-a-vis what we have done in the past. So the first question is, what are the signals that you see in terms of the debate, in terms of the opportunities for participation, in terms of the evidence base for the discussion that might give us a reassuring sign of the outcome of this crisis being different from the previous crisis in terms of building back better? So first point is, do you see any sign of optimism in terms of differences in the process that might give us reassurance that the outcome might be different? So the first is about the process. The second question is about administrative capacity. Do you have, and this links also with the question from Peter on how this links with the experience of cohesion policy, because for many of us who have worked on cohesion policy, lots of the objectives, lots of the keywords of Next Generation EU reminds of cohesion policy that has been going on for almost half a century now. And so the question is, do we see any difference? There is any sign of the story from the EU being different vis-a-vis EU cohesion policy? Because the EU cohesion policy has a history of success and a history of failures, but certainly is not famous for timely implementation. There is a huge story of delays and low absorption. How and to what extent can you mention some examples or any signs of, okay, key differences that might suggest that we have learned the lesson and that there will be positive discontinuity vis-a-vis the past? And then the final point is really on the winners and losers. So regions, groups in the society, entire groups in the society might run the risk to be excluded from the benefits of Next Generation EU. When we look at applicants of the projects, green and digital, we do see that they tend to be older vis-a-vis applicants for people that are involved in other projects that do not focus on green and digital, and also women. They tend to participate a lot less. So beneficiaries of green and digital projects tend to be much more gender unbalanced. So how can we make sure that not only we involve groups that would be otherwise excluded at the discussion stage when we design the interventions, but also how can we make sure that beneficiaries are really widespread across all sectors of the society, so that we build green and digital, but also we build a more inclusive model of society in response to the populistic movements that we discussed before. So I would be very happy to hear the reflections of the panel around these three key leitmotifs that emerged from the questions. Isabel, do you want to start?
Yes, happy to. The first question, which is about how is this crisis different and why Build Back Better may be best dealt now than it was a few years ago or years ago in the last crisis, let's say. Look, I can cite the example of the EBRD again. I joined in 2014. We had a mandate which encompassed environmental priorities. Green was not a green transition quality, was not one of the core objectives of the bank in terms of helping our countries of operation. It was like a co-benefit. There were environmental projects. It was not at the core of the mandate of the bank. In the 6 years I've been in the EBRD, now it is one of the 3 key topics, and the other 2 are digital and inequality, and it's 50% of the annual business volume. So there has been such a rapid change in how green priorities and Build Back Better have been incorporated and embedded into the institution. And this is what I see in many other places. So the European Union was always, a bit ahead of the others in terms of incorporating, for example, the green angle. But the last papers of the Commission and the European Green Deal and so on, climate is now the core of what the European Commission is trying to achieve. And I can see how the discussion is moving from the ministries of environment, as it was 10, 15 years ago, to the ministries of finance, which is where the conversation is happening now. So I think the discussion is becoming structural. I do think that this crisis is different than the crisis 10, 12 years ago. And I do think there is a genuine interest now in incorporating Build Back Better features in the recovery packages in a way that I didn't see back in the day, for example, in the financial crisis. I don't remember any of these discussions in the financial crisis in 2008, and I was doing something similar as I do today. It was a completely different discussion about how to inject money in the banks, how to create jobs. There was not such a structural push towards green and digital and inclusive. So I think something has changed. And maybe we're not there yet in terms of efficiency, and things can be improved, but the spirit is very different from what it was in the big financial crisis. Now, the second question on administrative capacity and the cohesion policy, I'm not well placed because I never managed any of those programs, so that I leave for others. On the third question on winners and losers, and whether some groups will be left out of this recovery plan, I don't think anybody will be left out, because I think all these green, digital, equality components, they have multiplier effects that go, towards the whole of the economy. But I do think some people will benefit first, and some people may get a blunt first. So for me, it is more a question of timing rather than benefits achieving everybody. When there is a big innovation and a leap forward in a policy, I think it goes everywhere in society. But in the short term, it is true it can create some short-term negative impacts. And this is why the Commission has very wisely come with concepts such as the just transition and others, which are focusing on those declining sectors and trying to diversify them so that they can get the most. So yes, there may be some short-term impacts. In the long term, I think it's going to be a rosy picture for all, really. And there needs to be some short-term measures to cope with the negative impact on certain regions and individuals. Thanks.
Thanks, Isabel. Francesca.
So, okay, so I will be very brief. So the first part, so I think the 2 elements, green and digital, are really tied together. And as often I use, so I presented the idea that really digital is an enabler of sustainable investment. You will have really a multiplier effect with digital innovation. And it's enough just to mention so many ideas. For example, the carbon trading is implemented a lot thanks to the digital solution. So there is an acceleration in the project that are dealing with all the aspects on ESG. So the ESG criteria that we have to consider now. The first thing is we are in a different situation as in the previous crisis. Yes, It's true what Isabel said. Yes, there is a, first of all, because there are a lot of money, different from the other case that we didn't have any money. So here we have a lot of money. So this is a completely different status, which is good, but we have also an opportunity that we cannot make mistake here. We cannot do any error, because we, as I said, the horizon is for a next generation here. We have to look for next generation. We have to do. We cannot make mistake. We have to be very, very attentive. So I like your idea that we have to call colleagues and we have to start to speak about it. Now, so as I said before, my fear is about the administration, that will have, at least what I can see, will have a difficulty to make the transition. Because I tell you, for example, transparency transparency provide inclusion, and for example, digital innovation can allow you this. I give you just an example. So, for example, the platform that we have for credit, from loans and credit risk, these are available now, and we have discovered, thanks to COVID, we are at home, we can reach our bank, and if you have a small enterprise, you can have a loan in 10 minutes without any problem. So you don't need anymore to go to a bank, speak with a bank, which will probably have some problem because I'm a woman, because I'm come from the south of Europe, and wherever discrimination can establish. Here, it's sometimes a different system that will look at my my previous accounts and make a decision. So there are good aspects and bad aspects here, but okay, there is a discussion. But of course, the innovation can tailor product, or make a diverse product, more dedicated. So that is very important when we talk about inclusion, because we'll help women, we'll help minorities, and that is why digitalization is so important. Now, there will be, of course, loser, because for this reason we talk about transition. There will be people that will not have industry that have set up or not created for digital world, and there will be new arrival in the market, and so we have to prepare for this. We have to prepare for this change, but I think that change will improve so much our life, and also our economy, but also our social infrastructure that we have, and architecture of all the different aspects that are inside. Now we are far away, so we use digital platform to speak with each other. I'm not saying that this is good, because I prefer to see the people live, but it's a way to connect people from far away. I'm in a small town in Sardinia, and I can speak with all of you from my small town in the middle of Sardinia. That is beauty, and allow me to be included in this conversation. That is also what the digitalization can allow us. Okay.
Grazie, Francesca. Thank you very much. Andres.
Okay, thank you very much. I'm going to try to link a lot of questions here, questions from Juan, questions from Arnaud, questions from Peter, questions from Victoria, which relate to the interface between the politics and the economics of the Recovery Fund. And I'm going to start by disagreeing with one thing you said, Ricardo. You said at the beginning that there's no paradigm shift, or many people argue that there's no paradigm shift. I think the pandemic has brought a paradigm shift, not because the pandemic itself means a shift, but because it has accelerated processes that we thought were going to take decades. We've been put into this, and Francesca has just mentioned it, into this social force experiment in which we have learned to work at a distance, to be productive at a distance, to shop online, to interact online, and life is probably not going to return to the situation we had pre-pandemic, because there would be a shift. And the problem with that is that there are winners and losers, and there will be also winners and losers from this fund. And the winners are going to be people with the highest level of skills, people that are in sectors that can be easily digitalized, people that are in sectors that are going to benefit at the beginning from this green transformation. Of course, as Isabel was saying, in the end, we're all going to win, but the transition is very, very important. And that's the thing we are overlooking. And in terms of sectors, there are going to be also winners and losers. It's not the same if you're making vaccines or you're doing research on medical grounds, or you are just focusing on tourism, or your economy is dependent on tourism. And that has implications for geography. Whether you look at the work by Jonathan Dingle on remote working, but also the work that has been produced by Paolo Veneri and his team at the OECD on the capacity to work on digital platforms, etc., you see that they come out with regions across the whole of the OECD, like the big cities, Paris and Brussels and London and Milan and Frankfurt, that are going to be the winners, San Francisco, but many others, rural areas, small towns, are going to be the losers. Regions that specialize on services and face-to-face services, the whole of Spain, the whole of Portugal, south of Italy, Greece, Turkey, with only less than one third, in many cases less than 1/5 of their working population capable to shift relatively quickly to a digital transformation, we are having the seeds for a serious problem. And then the question is, how do we deal with that? And that's where I come to the discussions that have been put forward by Juan, by Peter. Do we leave it to the nation states? Because there's the risk, as Juan was saying in his question, that we end up in a situation whereby we go for the short term rather than for the medium and long term benefits, like we did in the previous crisis, which by the way was a botched crisis and botched recovery, partially because there was no money, as Francesca said. There was no European money, there was austerity. But many countries in 2009, 2010 went into huge deficits just to prop up the economy in the short term with no impact in the medium and long term. So do we leave it to the nation state? Well, there's a risk if we leave it to the nation state that we go for that sort of short-term recovery. So we need to bring in the European Union and the European Union with this idea of going for long-term projects, putting a lot of money, but to do certain sure, deep transformation that is going to prepare us for the challenges ahead. But the problem here is that the timing is absolutely crucial. And the European Union, if it does and uses it as a diktat, or what is perceived as a diktat, you'll have national politicians that would put, especially in those countries that are going to suffer the consequences in the short term, the population against the European Union. And then we are in the same situation as before, that if the whole architecture is in danger, and now we are talking about serious danger. It was before the crisis. The situation is much more delicate now. Then we're going to have no green, no digital transition, no transition whatsoever. So the only way we have, and this is going back to Victoria, because as I said, in many countries, it's already hijacked the whole debate by national decision makers. It can be virtually everywhere, because we have seen a tradition, even in good times, of national governments and national decision makers putting the blame on the European Union for everything that goes badly, and getting all the credit for everything that the European Union does well. Then you have Brexit, then you have situations like Hungary and Poland, etc., and many other countries in Europe at risk. The only solution is put the debate in the open. Involve citizens, involve governments, participate, make sure that perhaps the emphasis so far is let's do things fast, and we need to do a lot of things fast. But 1.85 trillion euros is a lot of money. So you can do some immediate relief and then use, after you have had a serious reflection, discussion involving large shares of the population, in order to make sure that we go in the direction that would guarantee a better future for the next generation. Otherwise, I think politics will take over, and we'll end up with another botched recovery in which in 10, 15 years time, we'll probably be in the same, if not in a worse situation than we are now. We have an opportunity, let's make the most of it, but let's not forget the politics, because the politics would be absolutely fundamental in this process.
Thank you, Andres. Thanks, all panelists. I think our time is up. I think we agree on the idea that we are dealing and we are in front of a significant shift when dealing with the crisis. Unprecedented resources are being made available vis-a-vis the austerity that dominated the response to the previous crisis, and the themes have changed. As Isabella highlighted, the green and digital and the inclusiveness were not there before. However, these objectives, this new paradigm in terms of public policies comes with huge challenges and important trade-offs that we have summarized. What matters is the transition. Achieving digital and green goals generates a patterns of winners and losers across all sorts of dimensions. Jobs will be cancelled, eliminated, will not come back because of the digital itself. Will not come back because certain sectors are more prone to become green than others. So there are urgent answers. I do think that a two-stage approach is the best solution that we have available at the moment, starting with what needs to be urgently addressed to deal with the immediate crisis, and then think about also the longer term, and make sure that we have participation in terms of territories, in terms of groups, into designing the future of Europe, in general, the future of the world economy that we want to achieve collectively, or the price might be very high in terms of geopolitical consequences. We really do hope that this debate has open questions, maybe given ideas to many of our students who are attending this event, colleagues for research, for further debates on this topic. This is not something that will end at the end of this month, at the end of April, with the final submission of the recovery plan projects by the member states in Europe. This is something that will be with us for several years. And it is also something that we will need to reflect in terms of recovery, not only economic recovery, but also recovery to future pandemics that will arrive and will eat our economies. So it is very important, it's more important than ever to have a lively and ongoing debate on these fundamental questions. Our time is now really up, so let me thank Isabel, Francesca, and Andres for this engaging and thought-provoking discussion. Let me thank you all for being here today, our audience that has engaged and asked questions and made this debate a success. Thank you very much.